Welcome back to the channel, traders and investors. Today, we're diving deep into the fascinating world of hard-to-borrow stocks and potential short squeeze candidates. We're putting a microscope on a specific ticker that recently flagged on our proprietary screener, BJDX or BJDX Inc. This isn't just theory, we're using real, live data for BJDX to illustrate exactly what to look for. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/top chart. Let's start by understanding what BJDX Inc. actually does. BJDX operates in the healthcare and medical devices sector, a space known for innovation and sometimes volatility. Their core offering is a Symphony technology platform, which includes an analyzer and single-use protein detection cartridges. This system is designed to provide rapid measurements of key diagnostic biomarkers found in blood. Essentially, they're developing tools for quicker, more efficient medical diagnostics. With a market cap currently sitting at a relatively small $1.03 million, BJDX is what we consider a micro-cap company. What is cost to borrow and why it matters? So, why are we talking about BJDX today? It all comes down to something called the cost to borrow, or CTB. Imagine you want to short sell a stock. You need to borrow shares from someone else, usually a broker, sell them, and then buy them back later, hopefully at a low price, to return to the lender. But borrowing shares isn't free. Just like borrowing money, there's a fee and interest rate. This is the cost to borrow. When a stock is hard to borrow, it means there's a high demand from short sellers to borrow those shares, but very few are available. It's basic supply and demand. If everyone wants to borrow BJDX shares to short, but only a handful are floating around, the lenders can charge a premium. These fees are expressed as an annualized percentage, and they can get incredibly high, often exceeding 100%, 200%, or even more, because the demand is so intense and the supply so limited. Why this stock is hard to borrow right now? Show CTB numbers on screen. Now, let's look at BJDX specifically. Right now, the annualized cost to borrow fee for BJDX is an astronomical 747.2%. To put that into perspective, most stocks have a CTB well under 1%. A fee of nearly 750% means short sellers are paying an incredibly high price just to hold their short positions for a year. What makes BJDX particularly interesting is not just the level of the CTB but the context. We've seen roughly 45,000 shares currently available to borrow, which is a tiny number. And when we look at the estimated float for BJDX, it's approximately 0.9 million shares. A small float, coupled with very few shares available to borrow, is a classic recipe for a stock to become hard to borrow. Now, a quick note on momentum. We've observed the CTB momentum for BJDX has decreased by 140 percentage points over the last 5 trading days. While the absolute fee is still incredibly high, this momentum shift indicates the fee has actually declined slightly from an even high point recently. This is important context for a balanced view, suggesting some pressure might have eased, even if the overall cost remains extreme. Squeeze mechanics explained. Show graphic, short sell cycle. So, what does this high cost to borrow mean in the context of a short squeeze? A short squeeze happens when the price of a heavily shorted stock begins to rise, forcing short sellers to buy back shares to limit their losses. This buying action further drives up the price, creating a domino effect as more shorts are forced to cover. With a stock like BJDX, where the float is small 0.9 M shares and borrowable shares are scarce 45,000 available, even a modest increase in buying pressure can trigger a scramble. Imagine thousands of short sellers all trying to buy back those same 45,000 shares at once. That kind of demand against such limited supply can create an explosive price movement. However, a high CTB does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction that the stock price will fall further, and they are willing to pay those exorbitant fees to maintain their short positions. Looking at recent price action for BJDX, it's been a tough ride. Today's change is down 14.48%, the last 5 days are down 14.48%, and over the last 30 days, BJDX has dropped 42.6%. This suggests the shorts have been quite successful recently. Today's volume of 667,977 shares is also significantly lower than the 30-day average of 7,344,709 shares, giving BJDX a relative volume of only 0.1x average. Low volume and declining prices are generally not conducive to a squeeze, despite the high CTB. Our internal composite squeeze score for BJDX currently sits at 40 out of 100, reflecting this mixed bag of signals. Dilution risk check. One critical factor to always consider with potential squeeze plays, especially with small cap stocks, is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding. While this can raise capital for the company, it also dilutes the ownership percentage of existing shareholders and can significantly offset or negate any short squeeze thesis. More shares mean the demand from short covering gets spread thinner. For BJDX, we've performed our dilution risk check and found no recent diluted SEC filings such as -1s, -3s, or 424 BS in the last 90 days. This is a positive sign, as it means new share issuance isn't currently an immediate threat to a squeeze scenario. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, with BJDX, you have an extremely high cost to borrow at 747.2%, a tiny supply of borrowable shares at 45,000. And a relatively small float of 0.9 million shares. These are textbook ingredients for a hard-to-borrow stock. What would change the current bearish sentiment? Look for a significant and sustained increase in buying volume for BJDX. If buying pressure starts to build, especially on a stock with such a low float and high short interest, it could force shorts to start covering their positions, potentially initiating the squeeze we talked about. Keep a very close eye on the volume and any significant upward price movements on increased buying. Remember, the current low relative volume and recent price drops indicate the market has not yet found a reason to push this stock higher, despite the borrow costs. BJDX presents an interesting case study in the world of hard-to-borrow stocks. While the cost to borrow fee is truly extraordinary, indicating significant short interest and limited share availability, recent price action and volume have been bearish. This highlights the crucial point that a high CTB is just one piece of the puzzle and doesn't guarantee a squeeze. It simply tells us that holding a short position in BJDX is incredibly expensive right now. As always, rigorous research and understanding the full picture are paramount. If you found this deep dive into BJDX and short squeeze mechanics helpful, please hit that like button, subscribe to the channel for more unique stock analysis, and let us know in the comments what other tickers you'd like us to examine.